The KCB Group has fought off frenzied competition in the banking sector to retain its title as the most profitable bank in the region. During the 9-month period, the bank saw its pre-tax profit rise 17%, hitting 17.7 billion shillings. KCB now has its sights trained on lucrative infrastructure projects as it seeks to diversify its reliance on interest income. Adelaide Changole kicks off tonight's bulletin.
The government's plan to build and repair 10,000 kilometers of the country's badly dilapidated road infrastructure through an annuity plan has been well received by contractors, and now banks are angling to get a piece of the lucrative venture.
10,000 kilometers is 500 billion shillings of financing. That's 25% of the lending in Kenya today. So we have a chance to double the size of lending in this market in the next 2 to 3 years for those kind of projects.
KCB says its 451 billion shilling asset base puts it in prime position not only to facilitate lending to the sector, but also enable development of major infrastructural projects ranging from aviation, port, road, and railway.
We are very well prepared as a team to be able to support major infrastructure programs.
The news came as KCB retained its title as the most profitable bank in the region. The bank has posted a 17% jump in gross profit, which rose from 15.2 billion shillings to 17.7 billion shillings for the 9 months to September this year. The bank's net profit has also grown 15% in the third quarter from 10.8 billion shillings to 12.48 billion. KCB's asset base also rose from 385 billion shillings in the same period last year to 451.6 billion this year. Customer numbers were up 1 million to 4 million, which saw customer deposits jump from 301 billion to 350 billion shillings. The bank registered a 17% increase in loans and advances that grew from 225.7 billion shillings to 264.3 billion in the third quarter this year.
The bank has continued to grow at 264 billion, perhaps makes us the single largest bank across East and Central Africa in terms of the asset and advances.
But the CEO acknowledged that the introduction of the Kenya Bank's referencing rate in July this year will put pressure on the bank's net interest income going forward, and the bank is preparing for this challenge.
The growth agenda for this year has been largely because of increasing non-funded income for the year, enhancing agency banking, growing also our mobile banking. So 20% growth is kind of what really we want to grow at on a year basis for activities outside our loan portfolio.
Adelaide Changole, KTN Business.